Hi, my name is Jeff Fretz. Welcome to Axiory's news broadcast. Here's the latest high-impact market news for the week ending March 10th. Markets were dominated by strong equities, strong dollar, and weak yen last week. It's clear that the economic data from U.S. showed impressive improvements in the U.S. economy. Meanwhile, the top two Fed officials, Bernanke and Yellen, had indicated recently that the central bank would leave stimulus in place while data continues to show improvements. The Dow jumped to a new record high and closed strongly at 14,397. Dollar was taken higher against the European majors, and yen and the dollar index surged for another week. In the U.S., it was mainly non-farm payrolls which showed an impressive 236,000 growth in the U.S. employment market in February, much stronger than expectations of 158,000. January's figures were revised down from 157,000 to 119,000, but that was more than offset by February's surprise. Unemployment rate also dropped to a 5-year low of 7.7%, down from 7.9%. Manufacturing activities modestly improved in most regions, and residential real estate markets strengthened in nearly all districts. There were a number of central bank meetings last week, but ECB, BOE, RBA, and BOJ meetings failed to yield much impact. Both ECB and the BOE left their monetary stance unchanged. ECB President Draghi expected the Eurozone should return to growth in 2014. The BOE announced to keep the bank rate and the asset purchases. Now, the most important upcoming fundamental news for the week starting March 11th. In the week ahead, investors will be closely watching U.S. data on retail sales, industrial production, and consumer sentiment to determine the strength of economic recovery. Markets will also be eyeing development in the Eurozone. On Thursday, European Union leaders are to hold the first day of a 2-day economic summit. The euro fell to its lowest level in 3 months against the dollar on Friday after official data showed that the U.S. economy added significantly more jobs than forecast in February. Single currency rallied more than 1% against the dollar on Thursday after less dovish than expected comments from European Central Bank President Mario Draghi at the bank's post-policy meeting press conference. Draghi said policymakers discussed a rate cut, but the prevailing consensus was to leave interest rates unchanged. The euro shrugged off a one-notch downgrade of Italy by Fitch's ratings agency on Friday, citing inconclusive election results and a deepening recession. In the week ahead, investors will be closely watching U.S. data on retail sales and consumer sentiment to determine the strength of economic recovery. Markets will also be eyeing the EU summit beginning from Thursday. The dollar rose to its highest level in more than 3.5 years against the yen on Friday after stronger U.S. non-farm payrolls data. The yen also remained under pressure as expectations for more aggressive easing measures by the Bank of Japan remained intact. At a parliamentary confirmation hearing earlier in the week, Kuroda said that he would not set any limits on the amount of cash the central bank pumps into the economy. In the week ahead, investors will be closely watching the previously mentioned U.S. data. Finishing up our broadcast is the Multitrader Session. Today's multi-trader strategy is IGS Fund, which is one of the average risk strategies. It made a 1.32% profit last week, and today we have chosen its percentage of winning trades and average win-loss ratio to give you more insight into the performance characteristics of this strategy. This strategy has won 70% of the 47 trades made in the last 3 months, with an average win-to-loss ratio of 0.57. That's all for today. Tune in to us next week for more in-depth currency news that matters to you. And don't forget to check us out on Facebook and Twitter. Goodbye.